everyone, my name is Amanda Crowther and this is my partner Mark Dupuis.
Hi.
We are the general partners of Simple Acquisitions. You all have busy lives, so Mark and I want to thank you for taking time out of your hectic schedules to join us. So let's get started. If you tuned in, it means you are interested in finding an alternative investment option that will give you better returns. Or perhaps you're looking for other ways to diversify your current portfolio. Or maybe you have never invested before and you're just curious what all the hype is about with real estate. Whatever your reason, we are really happy that you tuned in and we know that you will leave here with some great information. Before we go any further, let's go over what we want to accomplish tonight. We're going to provide a little insight into our company, Simple Acquisitions. We're going to identify the amazing benefits of real estate as an investment. And then I'm going to hand the reins over to Mark and he's going to walk you through a current comparison of real estate to other types of investments out there and introduce you to our exciting program that we're opening up to our fellow Canadians. And then I'll come back and speak to you about the next steps. So let's get the legalese elements out of the way. I want to state that we are neither accountants nor attorneys. We do not give financial advice. We are here simply to provide you with some information. We want to talk to you about how private money lending can benefit you and help you build wealth. We always recommend you speak with financial and legal professionals before making any investment decisions. Okay, so let's get into the heart of why you're here. Let's start with who we are. Simple Acquisitions is an Ottawa-based company. Our specialty is in the multifamily acquisitions. So we look at apartments that range from 4 to 150 units. It's a good pocket for us because it's too big for the single investors and it's too small for the big players. We leverage a strong power team of professionals. There's a lot of moving parts in real estate and we do not presume to be experts in everything. So we work with the pros in their chosen fields to ensure we have everything in place for a successful acquisition. We work with accountants and attorneys to provide the right entity structure to protect your investment. We ensure funds are properly handled through title insurance companies or reputable attorneys. We never touch our lenders' money. We are a syndication company, which is just really a fancy way of saying that we partner with private lenders to acquire real estate for an equity share in the investment. Okay, let's next talk about credentials. So Mark is the co-founder of Simple Acquisitions. He has 20 years of experience in real estate. He has been an investor, a landlord, a property manager, a builder, a developer, and he's acquired and sold over a dozen income-generating properties all across Canada. He's part of a large development project in Belize, and he's also a partner in a commercial building and has built several new homes, including the one we live in right now, which was featured in a local real estate magazine. Mark has done flips, buy and holds, and all-inclusive and rentals. And he really does enjoy providing guidance to help others purchase investment properties of their own. So why am I spewing off Mark's real estate resume to you? Well, by accumulating experience in all real estate arenas, Mark has come to understand which real estate assets truly bring the best value to investors. Myself, I have a background in procurement, contracting, and finance. So I look after the day-to-day operations and keep the company firmly on the ground while Mark finds those deals that make us great returns. Next, let's look at the reasons why you might want to partner with us. 1, you can earn returns that are secured by the hottest commodity, real estate. Leverage. You can leverage our knowledge and experience. We do all the in-depth research and we look after every aspect of the acquisition, so you don't have to. 3, you as partner can access all the benefits that real estate provides and not just a fixed percentage return. And Mark's going to go into that a little bit more later on. So why real estate then? One reason is leverage. We have 100% ownership in the investment with only 20% down. If you were to buy $100,000 in stocks, you would have to fork over the full 100K. 2, for our partners, it's a hands-off operation. We hire experienced property management companies who know our markets and our properties. So that means not fixing leaky toilets or dealing with leases and rent collection. We work closely with the project manager to ensure everything goes smoothly. A third amazing benefit are the tax breaks. You get more tax breaks investing in real estate than any other investment, making it the most tax-preferred investment available. A fourth reason, we have the ability to defer the capital gains. If we sell an asset and purchase a larger property, we can take advantage of deferring those taxes through what is known as a 1031 exchange. And a fifth great benefit is that your investment is secured in the asset. If anything happens to Mark and I, as partners, you are on title and can decide what to do with the property. You can't get that kind of benefit with stocks or mutual funds. So let's move on to investment options. As you know, there are a lot of investment opportunities out there, and it can be downright overwhelming to decide where you want to place your hard-earned money. With any investment, there is a balance between risk and reward. Lower risk investments typically have lower returns, and conversely, higher risk investments are typically higher risk. So this is where I'm going to hand over the reins to Mark. He's going to walk you through some recent market returns for other investments.
Thanks, Amanda. I'm going to start by looking at some of the more popular options when it comes to where to invest. Each of the following charts will present data for its respective option as of February 5th, 2016, in terms of change over the last 5 days, the last year, and the last 5 years. Let's start with the stock markets. As you can see, all but 5 of the cells have negative returns. And the commodities markets don't fare much better, with the best return is a paltry 5.4% coming from the 5-day change in silver, which still has a minus 12.7% return for the year. When we look at the rates we get when trading Canadian dollars against other currencies, the only double-digit gain is the 1-year change with Mexican pesos at 11.7%. And if we would have kept our money there over the last 5 years, we'd only be up 1.8%. Not really that much to brag about, let alone retire on. Is this what you look like when you look at your returns? So, if you're opting to keep your money safe and invest in GICs or in money markets, you'll get low returns and tie up your investment dollars. If you choose instead to invest in the stock markets, for the added risk, you'll have the potential for higher returns, but you need to stay on top of your investment, and you'll need some experience and patience as well. What's our strategy? First, let's look at what makes anything appreciate in value. How many out there would like to buy some air? Although I can't see you, I'm pretty sure there aren't too many people raising their hands right now. Now, let's pretend I take you by the arm and drag you 30 feet below water. Now, how many people would like to buy some air? Probably most of you, right? And at this point, I could almost charge anything I want for that air, couldn't I? What changed the value of that air? Well, in the first instance, the air was plentiful, so why would you buy it? In the second instance, however, there isn't any. So it's the supply, or lack thereof, that made its value soar. In the real estate world, that balance between supply and demand is dictated by job growth. And those places that are creating jobs are called emerging markets, which, in case you are wondering, have the potential of appreciating significantly in 3 to 5 years. Phoenix, Arizona, for example. In the 1990s, Sun Microsystems brought 20,000 new jobs, and that market appreciated 42%. Between 2005 and 2008, the Metroplex area in Texas attracted 120,000 new jobs, and that market appreciated 46%. So, we find those emerging markets before they get that big boost. Once in those markets, we'll get properties under contract, do all the due diligence, negotiate all the terms before closing on them. Then our property manager oversees our plan to stabilize, add value, and grow our profits. We also track the market to ensure we get out in time to capitalize on that growth. I'm sure you're all familiar with the latest crash in the US, where property values tumbled 30 to 40%. Couple that with the rental shortage, the historical low housing starts, and earning those returns in US currency, and the low borrowing rates, well, that makes a perfect recipe for optimal gains. With the US economy getting itself back on track after several years of being stagnant, there are several viable emerging markets. We're focusing on a few areas in North Carolina. First, the largest city in the state, Charlotte. Then the Triad area, which includes Winston-Salem, Greensboro, and High Point. And the state capital, Raleigh and Durham. As you can see from this quote by real estate tycoon Donald Trump, real estate is the cornerstone of most people's wealth. Remember earlier when Amanda said that real estate had many moving parts? Well, here are a couple of those moving parts that help us put us in a position with our rentals where there will be lots of demand. Let's start with the largest population in the United States, who have a huge influence on financial cycles. Baby boomers. As of 2006, one baby boomer turns 60 years of age every 8 seconds. And as they start to retire, their plans will increase the demand for real estate. Now, as influential as baby boomers have been, there is an even bigger demographic of people that are also affecting real estate. Echo boomers. They are coming into the largest population for first-time home purchase, but are showing an aversion to home ownership, creating an even greater demand for rental real estate. The result of all these moving parts has made now an opportune time. So just how do you benefit from all of this? It's no secret that the best tax advantages go to business owners and investors. So, taking part in a passive investment with Simple Acquisitions puts you in an enviable position of earning those returns tax-free. And most likely, even help reduce some of the taxes you're already paying at your current job. You'll benefit from not only our experience, but from that of our team's knowledge as well. Our program at a high level uses a combination of institutional and private funds in order to purchase undervalued properties in emerging markets. We then work with our skilled property management company to implement strategic improvements in order to grow our profits. What do you get of all your involvement with us? We believe that if you're one of our partners, you should share in all the benefits real estate has to offer, not just a fixed rate of return. So you'll get 50% of the net cash flow the property you decided to invest in generates. Plus, you'll get 50% of the increase in value of that property once all the changes we plan are complete. You'll also get 50% of the depreciation. This is the mechanism that makes our investments tax preferred. And don't worry, skilled accountants take care of this for us. So, how does it work? First, we use our strict criteria to locate the appropriate market. Then we scour that market to find those properties that fit our strategy that generate great returns. Finally, our lawyers create a partnership agreement with people just like you that owns that property. It's important to note that finding and purchasing a property is only really a small part of everything that's needed to make a successful venture. We use skilled, knowledgeable experts to safeguard your funds each step of the way. And the piece of real estate is the asset that secures your funds. So we ensure that a promissory note, title insurance, as well as hazard insurance are all in place for each property. There are a lot of things that will happen in the life of your investment. We have put these procedures and documentation in place ahead of time, so there are as few surprises as possible. I'm sure at this point many of you are asking yourselves, what kind of returns are we talking about? Well, let's look at a recent project. This is a project that Amanda and I went to North Carolina in December to investigate. We ended up not being able to put the financing together in time, so it slipped through our fingers. But here are the details. For those of you who are not familiar with how to evaluate commercial real estate, it's very simple. First, determine your net operating income and divide that by the cap rate. For these units, that value is $864,888. And we had it under contract for $700,000. So right from the beginning, we believe we had a very profitable property. But the real value comes when we implement the changes that will maximize our returns. This particular project needs an additional $700,000 worth of upgrades, which is basically a complete renovation. And once complete, will generate great cash flow for many years. Notice the increase in the NOI up to a projected $197,820, which even if the cap rate stays the same, will drive the value of this building up to $2,198,000. This new expected value allows us to refinance at 63%, which produces enough funds to repay all partners their investment while they still keep generating cash flow. So, for comparison's sake, if we were to invest $100,000 in the GIC that's paying a 2.2% return, that would generate a total of $2,200 for the year. Compare that to having invested in this project, which was projected to return $28,500, and that doesn't even include your share of the cash flow or any of the tax benefits.
Thanks, Mark. That was a really great example. So by now you should have a general sense of how our program works and the great benefits that you can receive as a private lender partner. We covered a lot of ground in a short period of time. So hopefully the lackluster returns some of your investments are currently producing will be offset by participating in a passive real estate investment. So let's talk about next steps. This is what we see as your options. You can do nothing. You can live with your current returns. If status quo is working for you, that's great. Congratulations. Or you can contact us for more information. You can reach us at our toll-free number at 1-866-606-6841. You can visit the Contact Us page on our website at www.simpleacquisitions.com. If you just want to learn a little bit more about our company before speaking with us, we encourage you to sign up for our introductory video series, which you can find on our homepage. You can also visit the Q&A page, and it has answers to the most asked questions about private lending. And check out our blog page for some information-packed articles about real estate investing so you can get a little bit more comfortable with the concepts. Or you can get started right away on building wealth with real estate. If you have any questions that were not answered here tonight, I encourage you to reach out to us. We would be very happy to speak with you one-on-one, over the phone, or via email if you prefer. Real estate provides such an amazing opportunity to build wealth. Now is a really great time to invest in real estate. Don't delay in making your money work harder for you. Remember, real estate doesn't have to be complicated. With Simple Acquisitions, it's smart, secured, and simple. So thank you very much for listening. Mark and I hope to hear from you soon.